It is 4th of March on a Friday itself, and time now is 4:09 p.m. in Singapore itself. My name is Dylan, and welcome to my daily trading analysis video. So today we're gonna have the non-farm employment change data that's gonna be released at 9:30 p.m. in Singapore Singapore time, and but before we talk a little bit about that, let's kick off with the euro against the US dollar. Right here we have the euro against the US dollar in the day one chart, and as analyzed from yesterday itself, the price did appreciate and rebounded off from the key support level at the price of 1.0822, just slightly below the retracement level, 61.8%. So but however, this appreciation itself will probably not going to be last very long, as it is appreciated towards a key resistance level at the price of 1.1037. You can see that's resistance right here and resistance previously back here. The same thing may happen for now. So therefore we are expecting to see that the price will resume its depreciation sooner as it reaches this level. So into the 4-hourly chart itself, we have seen that the price has been reversing in a manner. I mean, previously it has been appreciating, finally touches the level right here, which is the bottom of the previous ascending triangle, and finally it begins to fall. That is a very strong sign of reversal for the euro against US dollar. So therefore we are actually taking this appreciation as a major retracement for us to go for the sell again, and we have spotted that the key resistance level right here at 1.1037 coincides together with the retracement level of 30.2%, could be the price for us to sell and as a price resume depreciation from here. Alright, so that is for the euro against the US dollar, and of course, last but not least, not forgetting that there is a lot of political unrest for the eurozone itself, especially recently we have the Brexit. They may still continue to force the euro to weaken even further. So that is for the euro against US dollar. Well, let's take a look at the pound against the US dollar in the day one chart itself. Alright, we have seen that the price has gained even further, and it actually broke above the key support term resistance level at the price of 1.4141, signaling for further appreciation, but towards the price of 1.4251 is another resistance level, which is also the final exhaustion level measured by the Fibonacci expansion based in the 4-hourly charts. And of course, not forgetting that the Brexit itself is still causing a lot of political unrest in the UK. Therefore, again, will push the pound to weaken even further. Alright, so this is the next level we are looking for a sell opportunity. But right just before that, let's zoom in the smaller time frame into the 4-hourly charts itself. We have right here is a falling trend line. Alright, that coincides together with the key resistance level at the price of 1.4251, which is also the final exhaustion level measured by the Fibonacci expansion. Of course, at the same time, it is at the retracement level of 50%. That makes this level a very strong level for us to take a look for the sell opportunity, and to hopefully that the price resume its depreciation. Alright, so that is really for the pound against the US dollar. Next we have the Australian dollar against the US dollar. Let's take a look in the day one chart itself. We have seen that the price has finally reached the key resistance level at the price of 0.7379, and therefore we may expect that the price will begin to fall, or at least make certain significant retracement level, because we do expect that the price will break even higher from here. Alright, given the rising commodity prices recently. So let's take a look into the 4-hourly chart itself. We are seeing that the price is also appreciating within a probable rising trend channel. That again gives more reasons for the price to appreciate further. But right now we do see there's kind of exhaustion right here as it reaches the key resistance level at 0.7379, thus expecting a significant retracement before the price resumes appreciation towards the top of the rising trend channel or even further. And therefore over here you may either want to look for this intraday sell opportunity, or you may just want to wait for the price to begin to retrace. We may plot the retracement from the bottom right here to the top to look for retracement level to go for the buy, and that is for the Aussie against US dollar. Alright, so next we have the New Zealand dollar against the US dollar. right here in the day one chart. As usual, we have the ascending triangle that's been mentioned for the past a couple of weeks, and we are definitely seeing that the price is most likely to break above and continues to appreciate further towards the price of 0.6879, the key resistance level at the top and the top of the ascending triangle that's forming right here. So this level itself would be the key level for us to go for a sell. But however, into the 4-hourly charts, price is definitely not showing much signal of a reversal, and thus most likely is to gain and break above the resistance right here very soon. And if not, a significant retracement might follow through, and that could be a good opportunity to go for the buy. Or if not, we'll have to wait for the price to break above. Probably when it makes small retracement in the smaller time frame, then we can go for the buy opportunity again. So that's pretty much for the New Zealand dollar against US dollar. But if you ask me, I would probably just want to wait for the price to reach the top and go for the sell, while I actually look for other opportunities to trade in the other currency pairs. Alright, so last but not least, I'll be touching on Aussie against New Zealand dollar once again. So quick summary in the weekly chart itself, the current structure definitely suggests that the price will appreciate further from here. And of course, if you call it, it could be what you call the inverse head and shoulder. And into the smallest time frame, the 4-hourly chart, we have a rising trend channel that's forming right here, and price just before it reaches the top of the rising trend channel, it has already begun to fall. And in the 1-hourly chart itself, there is also a minor rising trend channel, and the price has broken below it. That signals for the price to fall further from here. And of course, we are seeing that the price is also resisted at key resistance level at 1.0967. That's another reason for us to go for the sell for the Aussie against New Zealand dollar. And if we look back for the Aussie against US dollar, it is currently at the key resistance based on the day one chart. And for the New Zealand against US dollar, we are already seeing that it is most likely to break above and appreciate further. So therefore, that means that the Aussie against against the New Zealand dollar is most likely to depreciate, as the New Zealand dollar may appreciate from here, and Australia against US dollar may begins to make significant retracement and fall. Alright, so that is why we are looking for a sell for the Aussie against the New Zealand dollar. Alright, so that is all for today's analysis video, and of course, again, for tonight, we have the non-farm employment change. If you look at the calendar itself on the forexfactory.com, we are seeing that the previously the data was 151,000, and the projected the figure is 135,000 for the NFP itself. We do note that the Federal Reserve has been pretty quiet recently, ever since they began to raise their interest rate. And as for me, there's probably only two reasons. Either they felt that the US dollar is weak enough for another rate hike, and therefore the employment data later on might be a good one if this is what they feel and they are ready to raise rates. But however, keeping too quiet could also means to say they might be planning something else. May even want to take this opportunity to weaken the US dollar even further before they even consider raising rate again. Alright, so that is just my personal opinion and personal view. We will still have to see what's going to be the data for the employment change to really understand what is the Federal Reserve thinking as of this moment for their currency. Alright, so that is all for today. Thank you for watching, and I'll see you again next week.